Hi, welcome to the Market View for Thursday the 3rd of July 2014. And just before we get started, just to remind you that tomorrow is the US Independence Day celebrations, which means today that we have some funny trading hours for the markets too. Starting off with the US equities, the Dow in particular, the market will close at 6 p.m. this evening, so expect a very quiet session today, just as much as we had yesterday, but we'll see that more about that later on in the market view. Tomorrow all US markets are closed. The currency markets will be open, but again we could probably expect a bit of a lackluster trading session. However, that said, I have seen before when the US markets have been closed, it does allow everybody else in the world to move the markets around as they wish, so I can't say with 100% certainty that would be the case, but it's more likely to be that the market will be very quiet based upon what we've seen in the last few weeks and certainly the last couple of months. So tomorrow there will be no market view, and this will resume on Monday morning as we head into the weekend. Right, so getting back to yesterday's trading session, very quiet indeed. I mean, if we have a look at the total range for yesterday, this is the reaction to yesterday's news. Ballpark, we've got about 37 pips for this market yesterday. That's a very tiny range for the British pound. You can see we had three potential trades which were not filled, and we had one that was filled. And you can see how tiny the loss is. It's just a 13 pip loss on this one because the market was so quiet. So a miserable day for the market because it's stuck in this sideways range, and no doubt, as I said earlier, it's in part and due to the US Independence Day celebrations coming up at tomorrow. So very, very quiet. Daily charts, you can see this. Let's just widen the chart out a bit. We moved up slightly. Barely any trading range there. Let me just remove the markup as well, just to give a bit more space. So not a lot to actually report there. Let's just have a look and put some trading targets in there. Just in case we get some movement. I'm going to left click twice below the low of this bar because the market's making these higher lows. I've got nothing to come back off to measure for the downside, so I'm just going to click twice, and you can see the market has traded down to the 76% during the overnight session there. So I'm just going to remove this other one, and then if we want to see how far the markets can move to the upside, we can click twice on the upside, and again you'll see this market is actually trading between the two 76% retracements of the previous day's range. That is between the high and the low. So we've got 3 quarters down, 3 quarters up, and the market's hit both of those points. Very powerful tool, the fib retracement tool, for sort of projecting where the market's likely to trade to, as you can see there. And in today's news, what have we got? Let's have a look. Services PMI at 930 for the UK, and then minimum rate bid for the Eurozone there at 12.45. Now we've got the non-farm payrolls out today, which would normally come out on a Friday, but with it being the US Independence Day tomorrow, it looks like they're going to release these today at 1:30, so make sure you're out of the market for that. 1:30 non-farm payrolls, minimum bid rate for the euro, which we've already spoken about, the unemployment rate for the US to be 6.3 there as well. Unemployment claims, the actual figures there as well, the weekly one, got an ECB press conference, trade balance, and then the ISM manufacturing at 3 p.m. as well. So a lot of news at 1:30 today, which could ignite the market. So fingers crossed we'll actually get something before the markets go quiet as we head into the US holiday weekend there. In the implied volatility, well, it's that quiet. We made a new record low yesterday. We can see the implied there, 2nd of July. We are now in uncharted territory as far as the implied volatility is concerned. We're heading down towards the 8% level. 832 yesterday. Never seen this in 22 years of using this indicator. The historical volatility also making a new low yesterday, 606. Never seen it this low either. So we're in, say, uncharted territory for the implied volatility, and the lower this goes, the bigger the correction. That I have no doubts about. And finally, the Dow, very lackluster yesterday. You can see there, very, very tiny range. And also note what is very important here is the market traded up to this area and broke through, or tried to break through, then came back on very low volume indeed. There was no volume for this drive through on this market. In fact, it was lower than the previous 3 days. You can see this decline. So this market is able to go up on fresh air, where really we should be seeing a green professional buying bar like this one driving through this area. We are actually seeing this market being held up on the highs with very low volumes. So again, keep an eye on this is the sort of thing that most people miss. They don't look at the sort of what's driving the market. They tend to look at the news, when really what you should be looking at is what the professionals are doing, and there's no buying to back this move, as we see from the volume figures there. Of course, we do have the variable of we're heading for the US holiday weekend, but even so, they must have seen an opportunity to drive the market higher on Tuesday, which they did, and then yesterday the market stuck in this inside range, trading above the 16,970. So we got close to the 17,000. Maybe we can do that today with the non-farm payrolls, but certainly a very interesting picture there. That volume is incredibly low compared to the size and the trading range that the Dow did on Tuesday there. So just keep that in mind. As the market moves higher, you want to see volume back in the move. If not, then the market is just being marked up and not driven up on new buying. Right, that's it for me today. All things being equal, I will see you in Monday's edition of the Market View. Have a great weekend, and fingers crossed the markets cheer up a bit today and give us a few trades. There's nothing we can do about it. We're just stuck with what the market's doing at the moment. It's stuck in a very tight trading range. It's very quiet, and it's becoming a bit of a cliche in the Market View, but I do believe it's the calm before the storm. So just hang in there, and your patience will be rewarded. Okay, that's it. As ever, thanks for your support and also for watching.